Welcome to FreeFX. Today is the 20th of December. I was going to actually make a video yesterday, and I decided to wait because I just wanted to see what the S&P 500 was going to do today. So I'm just a few hours late and just wanted to kind of put a few resources together because I thought there's quite a lot to discuss. So without further ado, let's start with, there's lots to discuss, and I really just wanted to bring your attention to the S&P 500. You can see that that turn that I mentioned so many times now has actually come to pass. So we actually do have quite a bit of confirmation that this is really a 3-week dip to the downside. Dip, what do you call it? Essentially the continuation of the downtrend. So if you look back here to the left of the chart, you'll notice that there's a similar pattern. But then obviously we're just on the Tuesday, so we have another 2 days. And then we're coming to Christmas. So there's also the Friday, but the Friday might be quite a low sort of Friday in terms of liquidity, and there may not be much happening. So I'm just saying it won't be possibly the same week as the week of the 18th of April, but still we could see a lot of movement happening, and this would take us potentially down to 3,700. So today we're just sort of coming to 3,800, sort of coming to rest there, and this level we haven't really seen much action until now, but we're looking at the end of June. So after the bottom there, we came out to this, and I made a little note that this was essentially a triangle. So if you look at it like this, it's an ascending triangle, and then it broke out and we got all the way to the top of the channel. So that was back then. Then we got to the middle of August and then came back. This was the 3,800 level here, and that's kind of where we're now. So we haven't really interacted with that level much since then. This is 3,750 in end of October, early November, but that's about it really. So just going to take these off. So what is significant about today is that we don't have a lot happening, and if we look at the daily, that's kind of where we're at. Compression of candles. Now we're actually not in the US market yet because that happens in half an hour. So this is the UK, but still, you know, there's a lot to be said about this. Now, why would I think that, you know, it could be a little reversal here, just intraday? Or for the next couple of days or so, because if you look at the CCI on a daily, we've actually hit minus 200, and every time we hit minus 200, as you can see back here in September, we have a little turn and forward. It's not automatic, you know, we can kind of meander, but you know, back here for example, we had 3571 to about 3780, so about 200 points. So it can be worse than maybe taking a shot at that, I'm considering, because I freed up some margin as prices come down. Again, the same happened back in early September. We had this move up as we hit the minus 200. In fact, we dipped lower. We've actually, here we dipped lower, sorry. Here we actually came short of the minus 200. We've actually just dipped below the 200 negative, and so that's kind of what I'm thinking. This might turn higher just for a little brief few moments, and as I said, you know, that's pretty fine because we do need that within the week. It doesn't mean to say that we are bullish, quote unquote. So we are also going to check something else, which is that on the weekly, again for the CCI, we've turned lower. As you can see, this happened beautifully, just kind of not quite where I predicted. I initially said that it was going to happen a little bit earlier. I think I had it down to this point where it hit the top of the channel, and then it happened slightly later. In fact, I thought it was here, and then it went 1, 2, and then 3. That's kind of where it started turning. So I had to move this to the right, but now we've actually dipped under the 0 level. We've confirmed that, and you know, we could have something like this where we have a little retest and then further down. So I think we've had 3 candles to the red. Next week is a short week because of Christmas. We might have an upturn. That's the Santa rally, as they call it. So be prepared. But essentially, as before, we might be staying under that top line here, the inner trend line. So, but that's the technical side done. I've also sort of looked at different things, and one of the things that really struck me was that the gold situation, if you have it sort of laid out like this on a weekly, you can see that it's pretty much as opposed to being a safety haven or a safe haven or a sort of safety bet or a hedge against inflation or against risk off, it's actually pretty much followed overall. I mean, broadly, it's followed the S&P 500. And it's just kind of diverged here. It's gone up rather than down, but you know, it's done that before when it started going higher, and then it's sort of conformed. So I'm not really sure that gold is such a strong, strong contender for, in terms of people who are looking for stuff. But I might be wrong. It's just something that really interests me. We also have the dollar index. Dollar index is being also pulled down. We've had the Bank of Japan changing its essentially bond rate. As far as I understand it, it's sort of quite sort of it's not quite a tightening policy, but it's sort of tightened a little bit, and that's sort of gone from a slight negative to slightly positive. I believe from negative 0.25 to positive 0.25, something like that. A small change anyway, but it's huge in terms of the sort of decade-long easing policy that it's pursued. So that has had a huge implication for all the yen pairs: dollar yen, CAD yen, pound yen, Swiss yen, Aussie yen, and Kiwi yen was a big tumble as well this morning. I checked them all because it was big news. So that's why I think the dollar is also struggling because it's not really quite found its footing. But it's not to say there's euro strength or anything like that. It's just sort of overall, it's kind of struggling to continue this big uptrend we've seen. Other things that I'd like to see is the VIX picking up, because the VIX has really not done much at all. In fact, we're at 22.4. It's pretty much flat. It's flattened out, and it's quite outrageous, really, that we have a dipping market. Somebody on Twitter said, well, the VIX is just reflecting implied volatility. So if there's no implied volatility going forward 30 days, then even if the S&P 500 drops, not to say that the VIX has to behave in the opposite way, but generally speaking, that's kind of how we see it. So I don't know why that is. Everybody's puzzled about that. So what can you do? If I inverted the scale, you can see, generally speaking, it should behave in a sort of similar way to the index, and it does. So I think this will change. It has to, because that's kind of how we usually use the VIX. Not we personally, but that's kind of how. In terms of the WMA, the 21 WMA, we've broken below on the weekly, and if you add the Bollinger Bands, we've retreated all the way down under the bases, broke through the 21 WMA, and we're below both of them now. So all of which spells, yes, continuation to the downtrend, down to this lower Bollinger Band at least. That's kind of what I would expect to see. So I'm going to just discuss other things briefly, although running out of time. This is the Fed funds rate. We are essentially, if I put it to a day, we are 95.89. This is the December contracts, which means that we subtract from 100, and it's nearly 96, so it's 4.11. That's where the Fed funds rate contracts are projecting things. But if you look at the actual Fed funds rate, the effective Fed funds rate, we are higher than that, because we are at 4.33. So we're the implication is that markets, quote unquote, or people who trade on the Fed funds have not fully priced in or realigned with the Federal Reserve's projections. I'd also like to look at the commitments to traders briefly, because what's interesting here is that we've got the leverage funds. You can see leverage funds are quite negative, minus 476, and they're really not buying into any sort of bullish talk that we might see from something like the small speculators up here. So that's an interesting move as well. Also, the other considerations is the I think we had something here that was putting options. Yeah, options are looking pretty pretty bearish, so to speak. We've had a lot of options here. As I was saying yesterday, that 5 days ago I was saying that there was a lot of puts put at 3320, and now in a 3350, also a big increment there. If you can look at this, you'll see over 36,000 open interest change at 3350. So again, that's another confirmation that we're basically coming to this area that I mentioned before, where I've got my target, essentially 3350 would take us roughly there, 3350. Yeah, so that's kind of what I'm targeting really for all sorts of reasons, and I hope that you found this video interesting. I was meant to have an interview this week, but unfortunately that's been cancelled, so no interview, but I'll give you another of these videos later this week. So take care and see you in my next. Bye.